Hello and welcome to Inside Business, making headlines. Registrations for new companies double in Abu Dhabi. Middle Eastern luxury market expected to grow despite the credit crunch. And Thomson Reuters multi-million-dollar expansion plans. Yesterday was a shaky day for the markets. Dubai's bourse saw its largest single-day decline since August 17 due to MR Properties' weak shares and other property stocks, as well as Shua Capital's third-quarter loss. Thankfully, the markets are looking better today. The DFM rose by 5.24% to finish at 2,185 points. There's good news for MR shares too, which moved up 7.9% to finish at 4.37 dirhams. 392 million shares were traded, worth 893 million dirhams. 24 shares advanced and 5 declined. The Abu Dhabi Securities Exchange looked positive as well, rising by 1.97% to finish at 2,977 points. 128 million shares were traded, worth 292 million dirhams. 26 shares advanced and 5 declined. Registrations for new companies in Abu Dhabi have more than doubled since the minimum capital startup law was abolished in August. Official figures from the Abu Dhabi Chamber of Commerce reveal that 2,063 new companies have opened their doors in Abu Dhabi, compared to the 974 that began in the same period last year. Up until August this year, new companies were required to have a minimum startup capital of 150,000 dirhams. The new law allows the registration process to be streamlined and supports smaller companies wishing to work in the UAE. A new report reveals that public spending in the UAE is expected to increase by 14% this year. Figures from the Ministry of Finance show that gross domestic investment will increase by 28.7% of GDP this year, compared to 22.5% in 2008. The ministry says this is due to an improvement in investor confidence and investment climate. They also attribute it to increasing global liquidity, as well as deposits for the Arabian Peninsula and Switzerland. The Leaders in Luxury Middle East Forum began in Dubai today, allowing companies an opportunity to meet under one roof and share their business ideas during these challenging economic times. Joining us to discuss the challenges they're facing, as well as their plans to overcome them, is Mr. Mac McClelland, the President and CEO of the Luxury Marketing Council Middle East. Thanks for joining us. Now, how has the luxury market been affected by the economic slowdown? Are people still willing to spend lots of money on these items?
Well, thanks for inviting me. The luxury economy globally has decreased, obviously, more so in the West than in the East. The United States, for instance, has seen a significant drop of about 16 to 20% in luxury goods sales over the last year. Some of the other markets, Europe, about 8 to 10%, and amazingly, though, in the Far East, luxury sales are actually going up. The Middle East represents about 2.5%, or roughly $10 billion of the total luxury spend in the world. So has it been affected? Of course, probably not as much as some of the other areas, simply because the quality of life, the way of life out here is a higher per capita GDP than elsewhere in the world.
Now, which sectors are the strongest in the luxury market? For example, fashion, homewares?
Well, again, it depends on where you are. Fashion continues. People need clothes, although they're probably slowing down on some of the more expensive accessories that they would buy. The $5,000 handbags, for instance, they might get one this year instead of 5, but they're going to continue buying. I would say probably the high-end market of luxury yachts, airplanes, and the luxury automobile industry is probably taken the biggest hit because the high price tag. People are a little reluctant to put that money out there right now, waiting for the economy to recover.
Well, we wish you the best of luck. Thank you for your time on the program.
Thank you.
Mashreq Bank, Dubai's second largest lender in terms of market value, has begun working in Kuwait as part of its expansion plans across the MENA region. The Kuwaiti branch is the 94th Mashreq branch across the MENA region and is opened with a capital of 15 million Kuwaiti dinars and a team of 20 people. This comes less than a week since the bank reported its third quarter profit had dropped by 42% since the same period last year. The Saudi Arabian Monetary Agency has called for strict banking system and conservative lending laws in the lead up to the G20 meeting about bank regulation. The agency says they need to promote regulatory framework and conservative policies, giving the regulators and not the institutions the last word. Petroleum Development Oman has issued 3 tenders for the construction of stream production facilities and a power plant in southern Oman. PDO produces 90% of Oman's crude oil production and nearly all of its natural gas supply. The contracts involve the construction and installation of the processing facilities and pipelines. The closing date for bids is the 7th of February next year. The award date will take place in June 2010. Thankfully, the Gulf markets are looking much stronger today. Let's check in on those numbers now, starting off with UAE general indexes. Coming up now, we'll take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, we'll be talking to Thomson Reuters about their multi-million-dollar expansion plans across the Middle East. That's when Inside Business continues. Stay with us.